Your sense of what's going on in the markets? Friday's close, it was positive, up 61 points. Today, there's been some decline.
Yes, Lerato, thank you. Like you said, the market closed down today at about 0.61% over last week Friday's close. This is just a reflection of a trend we've seen over the last couple of months, where 1 week there's a bullish run, or there appears to be a bullish run, and then all of a sudden we see the market moving downwards. Last week the markets rallied by about 1%, but here we are today with a close of a decline of about 6.61%. Now, this is we believe that this is a reflection of what's going on in the larger economy, because the economy is the driver of the market. The rally we saw last week was essentially driven by speculation in the R8 stocks, the stocks of the rescued banks, following announcements that the central bank had made regarding possible deals. We also saw some rally on the stock of Transcorp and a few other stocks in that category. So we still don't think that we can pronounce that the market has recovered or that the bullish trend will be sustained. We think that there are still a lot of opportunistic investors who are taking advantage of significantly low valuations on stocks. A large group of these investors are represented by foreign fund managers who are taking advantage of these opportunities, and we think that this trend will continue for a while.
Obviously, what we have seen when the market was up some time last week, it was driven by the banking stocks, particularly the rescued banks. We haven't seen results coming through, but there's high expectation that things are going to look a lot better than what they've been in recent years. Your view?
Yes, following AMCON's activities regarding the banks, not just the rescued banks, but all banks that are going to sort of improve their balance sheet positions through the sale of AMCON bonds, we think that there's positive expectation about the earnings and performance of banks going forward. Looking at the rescued banks, I think some of the activity has been driven by the announcement central bank made regarding possible deals. But I think that there's generally a better outlook compared to last year on banking stocks, and a lot has to do with what AMCON is doing to make their positions, liquidity positions and financial positions stronger.
Talking about investors and what's going to motivate them to come back into the market, generally, obviously, the macroeconomic picture post the elections, more attractive valuations on some of the equities, but also dividends certainly have been an inspiration in other markets. Your views on sort of the dividend curves we're likely to see, because when we look at results from the brewery sector, for instance, the dividend proposals weren't really well received.
Well, they weren't really well received, and I guess we're talking particularly about Nigerian Breweries results. Yes. They announced 1.25 kobo dividend for the full year. You will note that there was an interim dividend of about 1.15 kobo, bringing the total dividend to 2.40 kobo. If you calculate a dividend yield based on the current price of Nigerian breweries, you're looking at about 3 to 4%. We think that the market's a yield of about 3 to 5 to 6% on stocks now is attractive, given that other sectors are not performing very well. So yes, the news was not well received, but we think that against the backdrop of performance of other sectors, you know, it is a positive development.
Let's talk about what we're likely to see going forward. Issues, for instance, such as launching a bond index to reflect the performance of Nigeria's burgeoning bond market. What do you make of that?
I haven't heard any announcement from the NSE regarding that. This was just reported by a few business papers. But obviously, an index is good for any market because it provides a benchmark for measuring performance and returns on a particular sector. An index is only as good as the underlying securities, and since we're talking about bonds here, we do know that FGM bonds make up about 70 to 80% of the bond market. I think as of March, the market capitalization on FGM bonds was about 3 trillion naira. Compare that to sub-sovereign bonds, which is just about 250 billion, and corporate bonds, which is just about 100 billion. So we think that any index that is going to be created will be built largely on the FGM bond index. We should also be aware that a lot of the trading on bonds in Nigeria happens outside the structure of the Nigerian Stock Exchange. It happens in an OTC market, which will have an impact on how investors view the index and what kind of discounts they're going to apply for liquidity and all of that. But we think it's a positive development. We think that there is a sizable market of FGM bonds on which an index can be built. However, it's anyone's guess as to how it's going to stimulate market activity on the primary side and also on the trading of bonds.